Hi everyone, I'm Laurie Ellison, and today I'm going to teach you how to post the sale of one of your properties from a closing statement. I'll make sure that this closing statement for reference is downloadable, but there are some intricacies about maybe property tax credits, either way, between buyer and seller, some other things that it's not an easy sale. It's not as if you sold your property for $500,000, you actually get a check for $500,000. There are all these other things that happen in the sale, and if you're looking at your closing statement, it even takes me a little bit to process. So let's do one together, and in another video, I'll do the purchase of a property. All right, let's get started.
Okay, guys, here we are. I will figure out how to make this a downloadable. This is just a sample to help you follow how confusing a closing statement is. And then, what really happens and what shows up in the bank account. So if you look here, the sale price is going to be $580,000. So in this scenario, we are selling the property for $580,000. And what I did, just to make it easy for this one, is I have the value being 580. So as we post this, the asset would go to zero. Now, hopefully our book balance is quite a bit less, and then we book a gain for income. But in this case, I want to keep it simple because this is already confusing and it'll probably be kind of a long video. So what happens when you sell a building? Well, first of all, they're going to pay you for the asset, $580,000. They're also going to reimburse you for things that you've already paid for. And they calculate these, I think, on like a daily rate or something. So certain things that you haven't, maybe you've paid the taxes and it covers a certain period, that now the new buyer will be using the property regarding some of this tax, they're going to have to pay you back that tax. So we have city, county. In this case, there was a common charge, an assessment, and we're just going to post this to maybe the purchaser rented the space for a certain amount of time before, I don't know. That's where we're going to throw it. Okay. Now, $58,000 down payment. This was paid to someone's escrow account, probably the seller's attorney, because we'll look further, they use this money to pay other things. Okay, so there's $58,000 put into escrow, and then they were given a credit on school taxes. See here, we have city and county up here, but in this case, the seller needs to give a certain amount of money to the purchaser. So this goes on in their favor. So we've got seller's credit. They should have 582. That's the total of this sale price plus these. And then the purchaser's credit, 58. That's the 58,000 that went into the escrow account, and take away 271.26 for school taxes that the seller owes the purchaser. You see how this gets confusing really quick? Okay. Then we show how the seller was paid. So there's this check, there's this, and then for whatever reason, there was money paid out of the escrow account for the transfer tax. So that was not paid to the seller. It was paid to transfer. Let me just see something. Yeah, this was paid out of the escrow account where the 58,000 had gone. Okay. Also paid at closing from the down payment, funds drawn on attorney's escrow account. So we have the brokerage fees, Seller has to pay both sides of, the buyer's broker plus their broker. So you have two checks going to two different real estate companies. And then we have more transfer tax. And maybe this was actually recording the sale, and this is the transfer tax. And then the attorney's fees are taken straight out of that. So it would be so much simpler if they just gave the seller all the money and then the seller at closing writes these checks, but that's not how it goes. I'd like it if they did it that way. After the closing, the sum of $22,456.23 was deposited into the seller's account. So the seller at one point got this check, $428.96 and $22,456.23. You kind of have to like go over this and get that in your head clearly before you even start any of this. Okay. So you have we know we have our asset for $580,000. Now I'm using a demo account, but some things I did make sure was that we had like a property tax. We're going to use that for the 2021 city tax, county tax. I think I made a school tax. And I made a school tax. I made sure before I started that I had all of these things listed on in the chart of accounts. Real estate commission. So try and get everything you need to in here. Like I know now after going over that with you guys that I need to have a recording fees. Okay. All right. So we're going to have, okay, here's the next thing. I also made an exchange account for the sale because certain things are offsetting, and we cannot post that $58,000 as a deposit because it didn't come into your bank account. It went into your attorney's bank account. So it's like, how do we account for that $58,000 and all the expenses paid out of it? That's where it gets really confusing and much higher level of bookkeeping. But if you just follow this and follow the logic and the way I'm going to teach you, you still can do it. It just, you might get confused and have to start over, but you can do it. Okay. So one way we could do this is, first of all, we sold the building. Another thing I always say is if you don't have to do a journal entry, don't. So our date of the sales today, we're saying we don't own the building anymore. So let's go move it and throw it into our exchange. Okay, now let's go over here. Right, so just to keep track of what you're doing, why not do this? Okay, that means you posted it. So we're gonna do it this way so you can watch me, but I would just keep, like something, red pencil, I like that one. Purple marker. And this is what I do. I just tick, let's see if you can see it. I just check things off. If I get myself confused, I start over, I reprint this. Anything to make it easy. Okay, these adjustments where it says city tax, county, and so forth. These are negative expenses for you, and we're going to call this income. All right, we're going to just say that they had to give you money for something. We're going to put it to income. Once again, all of this needs to go through that exchange. Should I put it? Honestly, this time I'm going to do the journal entry because I know I need it to be a negative expense. So this way I can be sure. So expenses are always debited. So if I'm doing a negative expense, it would be the other way around. So you got property tax. So I'm going to do a credit because expenses are always debited. Closing, I'm just going to say closing statement. So we have that. credit to seller, and property tax. I didn't make a county tax, so. Should write here, county. Always put as many notes as you can, so then you don't have to wonder what you were doing. Okay, so we've got those two, common charge. So again, it's gonna be credit, because it's not really an expense, it's a okay. So I made sure I had all of these codes. And you should have these codes. This is a demo file, but you should be generally making these. Like, so if you're getting credits for them, you should have already been paying them. And we're just going to put this to rental income. Now, income is always a credit. Okay, so that would add up, right? 2,373.77. We're going to put this to our exchange, because these are more things that our exchange should go up to 582,373.77. Let's go check it out. So, right, so we had purchase, now we have these. And it won't always be this so easy. Okay, so we did the 580, and then we added all these other things that we need to be paid for. So right now we need to be paid $582, $582,373.77. Let's go. I like to go to the register. I think if you do the registers, look, how beautiful is that? 582,373.77. So we've gotten to where we need to get paid, right? So we've got to figure out, like, we've started here, we've sold our building, plus the seller, the buyer owes us this extra $2373.77. Now follow me as we work backward and take out all the things they take from you when you do a deal. Okay. Now let's go look at this statement. This is where it's not going to go so easy, because then I to from the purchaser. So we're going to do this. We're going to increase the attorney exchange. Okay, so now we got 58,000. We're going to assume that that's basically paying down. Now we went down to 524. We were at 582. Okay. Okay, now we have to pay $270.21 back to the seller, right? So sometimes I actually do need to do a journal entry because it's an exchange account. So we are crediting back the school tax. We have to give the seller a credit, $271.26. Credit to buyer. So they're going to pay you $271.26 less. I'm leaving that attorney exchange just to deal with the 58,000 they already paid, because we're going to have to figure out how that was paid out of proceeds. Save and close. Okay, so now we're saying they paid the 58,000, right? And we're saying they paid the 271.26. So theirs is 58,271. So now we say 524,102.51. There we go. We're still following along. All right, so we've got 524,102.51 is our where we're at. You can say, yeah, we did that. We're good. Okay. Balance due at closing was paid as follows. Okay, so 428,737.33 was paid to your bank account. So you got a check and you're going to deposit it, right? Let's go up here, bank deposit. We're going to hit the exchange because we're not doing net deposit. So we're going to do exchange sale 428,737.33. We said this was check number 123. It was received from your buyer, probably your buyer's attorney. But and we got one more to post. We received check and remember, you do the exchange sale, not the attorney exchange. 96,413.95. Check number 124 from buyer. I don't know why I would capitalize that. Because that went into your bank. So now we're off 1,047, and look at this. Okay, so good. We're gonna say fine. Good. But then it says check 502 in the amount payable to record and return paid out of escrow account, and I wrote in here from before, which held 58,000. So that you would have been short. So there's, let's go to the other one. Basically, check 502, payable to record and return, refund to purchaser. So it's a credit to the purchaser. Okay. We're not going to really put payees in here because it wasn't paid out of your real bank account. We're just tracking. So this 104,877 just needs to go to our, leave the escrow amount. It's already posted in your expenses and so forth, but we've got to, so we're going to do it to our sale. This is where it gets so confusing. Record and return. It's just some item off closing statement I'm using. Okay, so now we go back. Our exchange is 0. But we need, but that we as the seller didn't get all of our money, right? Like we're not, it's not totally clear yet. Because if you added those up, I feel your pain paying all of that That's 525 and you sold it for 580, but you have all that other things you need to do. Okay, so now here you are with the attorney account, your escrow, because we tied that all out, right? Yes. Okay. Now we need to enter the expenses of, and we're not going to do payees, and we're not going to worry about 1099s if these are paid out of your attorney's account. I wouldn't. Attorney should do it. So you had to pay real estate commission. So this, here you could say escrow check number 528 grand realty. This was not paid by your company. Should ask a CPA about that. So it's more like a journal entry. We're just posting it in the register so we make sure we go the right way. And this is where you could check your attorney and make sure they got their numbers right. And never assume that everybody got it right. Never. Come on. Okay. Now it says transfer tax. Okay. It's good to make sure you have all these line items. You wouldn't maybe have transfer tax in here unless you've sold other properties. And usually you might not, because so this would be the attorney taking their own fee out of the money, out of that initial 58,000. Oh, we have the same thing, whatever. So sometimes what people would do is like, see all this, they would do one big journal entry, kind of how I did the top part where I did all the line items and then did one posting. But if you're really not sure what you're doing, enter like I'm doing now, one piece at a time. So if you screw it up, you only have to void or delete one piece, not like the whole journal entry. That's why I don't like big journal entries. Okay, so now we've taken all of these things out of this 58,000, right? Going down the line, and look how beautiful this is, guys. It's beautiful. I love it when stuff works out. After the closing, the sum of $22,456.23 was deposited into the seller's account, representing the balance of the down payment after the payment of closing costs and the refund to the purchaser. That was at $1,048.77. So this is perfect. So now, and this is why you would need two exchange accounts, one to track your escrow money, and then one to track the other piece, you know, you actually getting the money. Okay, so now check from attorney, remaining escrow deposit. So 22,456.23. This is going into your bank. You should have 3 checks in the end. Come on. In the end, you would have this as your deposit, the 22. I highlight. Right? That's your last deposit. And then you had this part. This one. So you'd have 428, I'm not gonna say it, 96 and 22. Let's go see. Oh, I was doing all kinds of stuff. There's our 22. Where did I throw the other? Maybe put them in the other bank. Checking. Oh. $96. Okay, so here's your 3 checks for the sale. So in the end, out of 580,000, you got a total $547,607.51. You gave the buyer the credit for the school taxes of 271 here. You also gave them a credit of 1,048. And then you had to pay the legal fees, the transfer fee, the attorney fee, and the commission fees. But what's so pretty about this is how if they don't go to zero, you know you've got something wrong or someone screwed something up. And that's why this exchange is happening more with your bank account. It's really kind of hard to totally explain it, but if you do it how I did it then, and I honestly am amazed it went so well, because sometimes I'm a little spazzy when I approach these. But I think kind of if you start from the top and work down, you'll be all right. Now, the other thing I should mention is usually your building will not be worth on your books exactly what you sell it for. That's a whole nother video. All right, guys, I hope this really helped. Please put your comments below and any requests you have for any other videos. Have a great night.